Welcome to Drill Down Earnings. We have quarterly results out from a company called Lumentum. I think it's one of the 50 most important companies in technology. And who am I to think such a thing? I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Yeah, we look at the business stories behind stocks that move. Lumentum's a company. I once owned this stock. I don't own it anymore, unfortunately. It's done great things. But it's in this world of optical networking focused on the data center, an AI play, if you will. And so I think when you look at the numbers, you start to see some really interesting developments in the company. This is the fourth quarter 2025, fiscal year 2025 earnings for this company. And Wall Street can't figure this stuff out. A beat or a miss, and they move on, and it's a beat. Yeah, so okay, great. $480 million in revenues, 88 cents in adjusted earnings per share, above the estimates, as I mentioned here. These guys make the componentry that moves data within the lasers and things that move data within sort of cutting edge units of a data center. And of course, as we build out data centers for the world of AI, the ability to move that at the speed of light and to tune that light in these lasers is exactly what Lumentum and a handful of other companies I own, like Coherent and AAOI, Applied Optoelectronics. This is not investment advice, but I do follow these companies because I think it's a really interesting place in our economy and, again, in our technology world right now. Lumentum's a turnaround story with a new CEO. Back when I owned the stock was another CEO. This guy's doing great, 56% revenue growth on a year-over-year basis. Really has cleaned up the product portfolio with $481 million in revenue in the quarter, proving that. And that, again, that fantastic growth. Gross margin's getting better at 37.8%. So more and more profits, selling more and more stuff. And while the company on a GAAP basis, still losing money, negative 2% operating margins. That's so much better than just a year ago when it was negative 43% operating margins. A real turnaround here, driven on the back of cloud modules. So they are selling to all three major hyperscalers. We imagine that's Amazon, Microsoft Azure, and Google Cloud. Each of those exceeding 50% sequential growth targets that they had for those customers, and they think that's going to accelerate in the coming quarters. Just kind of amazing. When you think of all their business, they have some industrial lasers. It's 12% of revenues. That ain't nothing. But cloud and networking is 88% of revenues, and it's surging here, sequentially up 16%, up 67% on a year-over-year basis to $424 million, driven again by those hyperscalers and demand for those EML chips, nearly doubling year-over-year, pump lasers, narrow line width lasers, and 800 gig modules. These are the cutting edge things, not the 100 gig that some other of their competitors are still selling. They're still selling those too, but 800 gig really is kind of right at the edge of the cutting edge. 1.6 transceivers. Also, they say they're going to be shipping those in the fourth quarter. They're sticking to that deadline, not being pushed out. That number's been pushed out by a lot of other companies. They say they're going to be shipping those in the fourth quarter. Really positive, and that's why their cloud networking business is just cranking. And they're, also new products are bringing in optical circuit switches from two hyperscalers. A third is committed for next year, they said on the conference call. And they've had their largest ever purchase order for ultra high power lasers. So, and that's for co-packaged optics. Co-packaged optics, I'm obsessed with co-packaged optics. Co-packaged optics, they say it's coming. I'll believe it when I see it. Everyone's said this thing's been 6 months away or 9 months away for 3 years, 6 years, but they say it's coming. We'll see. They say a bigger launch of co-packaged optics in the second half of next year. We'll keep an eye out for that. Their industrial technology business, up only 6%, cooling off a little bit. Seasonal patterns there are typical, but ultra-fast lasers holding steady. Solar cell demand is working for them still, but it's a small part of their business, 10% of their business. Also impressive, I thought, they kept their inventory in check. Inventory at 142 days. It's not the best it's ever been, but it's certainly better than the overstocking that they had maybe a year and a half ago. When you look at the chart, you see the stock did up only 2% in after hours trading. That's not much, but 166% in the last year. Fantastic return for investors in this company really with this turnaround happening there. And I think maybe the most important thing is they're locking in margins as these growth numbers are happening. Margins have been, were down at 10% a year ago. They were up and up and up and up again, now up to 24% margins in the cloud and networking segment for Lumentum, even as they are launching optical circuit switches for two of the hyperscalers. As I mentioned, a third one committed for next year. And it's exciting times. And they think that they've really got a competitive moat in this world of lasers for driving the optics in data centers. Here's CEO Michael Hurlston.
We feel good about our ability to maintain a competitive moat here for two reasons. One, there's a unique power level that this laser throws off, but more importantly is the reliability. And we're able to translate a lot of what we've done from undersea lasers and Raman pumps into this particular product line and develop it. It's leveraging a lot of the same development concepts that we had there. So we feel good about the competitive moat. You called it out well. I think we said in the prepared remarks, we would expect meaningful revenue from this again in the second half of calendar 2026. We are seeing, we talked about the order, a very significant order. We are seeing early shipments. So at least as far as we know, we're sole sourced. We believe we have a good competitive moat that will keep us in that position.
So things going great, Guns. Are feeling very optimistic at Lumentum, but what's it all mean and what's your big drill on earnings takeaway, the one number that tells you a whole lot? Well, I have that as I clear my throat. So Lumentum Q4 2025 earnings, really strong quarter for this company, nearly $500 million in revenues. They say they're going to have a $600 million quarter sometime in the next year, and really strong guidance, strong quarter, 56% revenue growth on a year-over-year basis. But that's not the number that tells you everything about this company that is making the devices and the lasers that move information in data centers. The most important number is indeed that cloud and networking business breaking away, 67% year-over-year growth in the biggest business they have at Lumentum. Really positive news for this company that competes with the likes of Coherent and AOI and others. Interesting company. Thanks for listening to Drill on Earnings. Special thanks to my interns, Graham and Nick. That's Nick. Nick, you want to say hi? There's Nick. They did a great job this summer. So happy to have them. Hey, follow us on, as well, me and X at Cory TV, and of course, at Drill Down Pod on TikTok, Instagram, and YouTube.